Welcome to our episode of the Global Investors Podcast. I'm your host, Charles Crillo. Today we have Chase Calhoun. He is a real estate investor, developer, and licensed general contractor who owns and operates a portfolio of over 75 residential units and leads development efforts focused on build-to-rent communities, infill new construction, and heavy value-add projects. Chase's companies handle development, construction, acquisitions, leasing, and property management in-house. So Chase, thank you so much for being on the show today.
Thanks for having me.
So you have an interesting story coming out from, I believe it was the West Coast, coming into Central Arkansas. Can you tell us a little bit about yourself, both personally and professionally, prior to getting involved in real estate and launching your own firm?
Yeah, absolutely. So I am married to my beautiful wife, Brenda. I've got two kids, a 13-year-old and a 2.5 going on 3-year-old with another one on the way. So it's kind of exciting times for us personally. As you mentioned, I'm originally from the West Coast, so California specifically. I always ask people not to hold it against me, but that's where I was born and raised. We moved to Arkansas, Central Arkansas, 8 years ago. It's kind of an interesting story. I always joke around, tell people we got lost and this is where we ended up, but it's kind of a long story. But I had wanted to get into real estate investing in California, kind of missed the opportunity when I should have been buying everything I could back in 08, 09, and 10. And then when I was ready to go, was able to find a contract type position. I was working a commercial insurance job at the time in Little Rock that would pay me the same as they did in California. And so we kind of knew nothing about Arkansas and the fact you could buy cheap houses and the rent seemed decent. And so we made the leap and got started in investing.
Nice. Very nice. Was there any kind of reason that you chose? How did you just kind of get onto real estate as an investment kind of vehicle?
Yeah. So, it's funny. It's like most real estate investor story. I read Rich Dad, Poor Dad when I was like 15 or 16, and which is a business book and not necessarily a real estate book, but everybody reads that, wants to start getting invested in real estate. And so I read that book. I got really interested in it, and I spent a ton of time just researching, looking at properties, trying to figure out how to get started. I know like huge resources like BiggerPockets that helped me along the way. I didn't find those at the time. And so it was like just kind of trying to learn what I could when I could. But it wasn't until, like I said, about 8 years, I think it was 2017 when I made that jump, decided I was going to do it for sure. And then Little Rock is where we chose. I wish there was some I did a bunch of research. I made this super calculated decision, and this is why we chose Little Rock. It's worked very well for us. We've been very blessed that we ended up here. But it was more of like, hey, where can you send me that you'll pay me the same amount of money where I can buy houses for cheap? And it was, they rattled off probably a couple dozen, places where they had a need for work, and Little Rock was one of them. And so it's just, we did kind of end up here, and it's worked out very well for us.
Yeah. You're going from probably the most, least landlord friendly state to probably the most landlord friendly state. So for a real estate 100%. Investor, it was a very smart move.
Yeah. It was great.
So tell us a little bit about you have a number of different businesses. You guys are doing infill development. You're doing heavy value add deals. You're doing some single family, I believe, flip still. You're doing multifamily stuff. Tell us a little bit about your different businesses and what your current investment strategy is.
Yeah, absolutely. So it's more along the way. Like I said, when I first got started, it was just me, just real estate investing. And over the last several years, especially the last couple of years, we've started separating everything just to make it a little bit more clean. And so we have Chase Calhoun Real Estate, which is a real estate sales, but mainly a third party and internal property management company. So that handles all of our property management for our portfolio, plus a handful for, third party customers. And then we have Apex Professional Construction, which is a standalone, fully licensed, commercial and residential general contractor. So we're licensed home builders, but we also hold an unlimited commercial license. We do a little bit of investment type commercial projects. And then we have Apex Real Estate Investments, which are our internal rental portfolio. Our rental portfolio, I think it's morphed over time as we've pivoted. A lot of that's market dependent. A lot of it's been interest rate dependent. And so early on, we started with a lot of heavy rehab, value add projects, both single family and small multifamily up to 12 unit type complexes. We could never get, at least a couple of years ago, we couldn't get the bigger ones to pencil, and kind of rightfully so. I'm glad we had held off on those. But literally anything from we're going to have the tenants move out and do full renovations on an old 1980s small apartment complex through these small multifamily buildings or single family houses got basically destroyed by a tornado, and we're going to go and rebuild them kind of from the ground up. That's what we did for a long time. And I would say over the last year or two, I've been pivoting pretty heavy into ground up new construction, build to rent. I see a lot of opportunity in it in the future. We tested our first couple, 4 or 5 years ago, just building straight up new construction rental properties, and they've done very well. And so as we scale, I just see that it's a much like cleaner path for us to scale than the heavy rehabs. And there's just from a tenant class and low maintenance and all those kind of things, it just seems to be a really good place, especially going into this tougher environment.
So with kind of being hyper focused for you on one market, I mean, how does that work? And do you feel it really gives you a leg up being for you, Central Arkansas? Is that, would you would say, very beneficial for a real estate investor, just being on one market and all in on that? Or maybe you have other investors that might go to 2 or 3 different markets. They're balancing this, they're balancing the property management on it, they're balancing all these different things. For you, it seems like you've been very successful just working in one area.
Yeah, I really enjoy being hyper focused in one area. I think it allows us to get not just to be experts in this market, but to be kind of, one of the bigger like investors in the market. We're known and people are coming to us with deals. And also like we've seen I would say this last year has probably been the hardest I've seen it when it comes to like leasing in just the operations side of management. And I think we've been able to really excel because we're here and because we're hyper focused on this market, where I've seen a lot of people struggle. And I've had this conversation several times with multiple investors over, I would say, the last year, where they've got properties in multiple markets, and it's just really hard for them to have their leasing and operations dialed in if they're not super familiar with what's going on here on a regular basis.
That makes perfect sense. When you said you're going into more ground up development instead of heavy value adds, you were saying before, and I think you just mentioned it was a better tenant class. So, I mean, probably a more credit worthy tenant you're getting. What type of properties are these? Are these apartments? Are these build to rent like townhouses or regular houses? I mean, what are these units and properties you're focusing on?
Yeah, we're building a mix right now. So we're building mainly single family and small multifamilies right now. So single family homes and duplexes. I like to call them townhomes because a lot of times they're a little bit nicer than just a traditional duplex. And then we're doing some higher end townhome type duplexes, depending on the area. We really build, when we're looking at areas, we will build, not in horrible areas, but as long as they're like a C+ or B type area, we'll build in them. It's just, we're going to build a product type that fits well with that area. So we don't want to build something too nice and price ourselves out of the market. So it's really like, what rents will this area bear? And then we'll build something that's kind of tailored for that market specific. But we've had a lot of good luck with smaller single family homes, and then the duplex townhome style more recently. I'd love at some point to build some larger or mid-sized multifamily stuff, but there's a lot of guys here locally who are doing like the larger Class A stuff very, very well. And I have zero interest in trying to come in and compete with them because it's just not gonna work well for us. But the single family and small multifamily has been a great market for us. I do think our nation's going to continue to become more of a renter class. And I think especially young people are still going to want to step up from an apartment to a house or like a townhouse that feels like a house at some point. And so that's why I see the value in these right now, because it's at some point they're going to outgrow that like Class A resort style, apartment living, and they're going to want a house, but they may not be ready to buy right now. And so we really want to build a housing product that's going to work as a next step for them.
Interesting. Yeah, I would imagine the other benefit too with these nicer properties is that you're having a high retention rate. I mean, I would imagine multiple years instead of maybe, some landlords in multifamily are just happy when that second lease gets signed, 12-month lease gets signed, and they get someone there for 24 months. But here, I would imagine it's going 2, 3, 4 years that you're getting it. So it cuts down dramatically on make-ready costs and other costs. People are making it a home, not just a place they're living in currently.
Yeah, absolutely.
Yeah. So let's talk about like the vertical integration, because this is obviously much easier when you're in one market. Can you walk us through, because when speaking with when we have syndicators of all different sizes, investors of all different sizes, that some have in-house property management, some have thousands of units and still use third-party management. Walk us through kind of when you made the decision or into becoming vertically integrated and kind of really bring in your management and construction in-house.
Yeah. So it's kind of twofold reasoning for me. When I first started, a big reason that I started self-performing on the construction projects and the management is because even though there's a lot of opportunity in Central Arkansas, the availability of like high quality vendors that I'd be able to hire to do those things for me was very limited. And so there just wasn't a lot of good options at the time, especially at a smaller scale. And then the other side of that is when I started getting, especially on the build to rent side, when I started getting more interested in that, I've had the opportunity to attend some some events that have much larger operators at them. And almost all of the larger platform operators that are in this space are completely vertically integrated. Some of them will still parse out their construction, but usually it's very controlled when they're doing it. And so at the end of the day, like we look at them and treat them as separate entities and separate P&Ls. But it's like in order for our construction company to be successful right now, like we have to be able to help some of even our customers when we're doing them for customers, and especially our internal units, they have to lease well and be managed tight. And so it's like, if we don't have control over both pieces of those, it's just a little bit harder, I think, for us to be successful in this market. I think there's some markets where you absolutely can go out. There's rock star property management companies and you don't necessarily have to bring it all in house. But I think for us, in order for them to both be successful, they both have to be running at kind of like a very high level. And so that's a big part of why I decided to vertically integrate or bring kind of all the pieces in-house.
Yeah, it makes perfect sense. And what I found over the years is it's not 100% and or kind of thing. When I started investing, it was something where we started off with like triplexes and it was kind of scattered. It was all scattered. You know what I mean? And so when I self-managed them and then when I brought in a third-party manager for them. But the thing that what I found was that I would speak to other landlords in the area, and you can still do it today if you go to any local real estate meetups, and it'll be something that was, some people that are like, well, we'll keep our management and we'll do some of the management in-house, and then what we'll do is we'll have this contractor out here do some of our construction, or we have a third-party manager. However, they're using this handyman over here that's ours, that's on salary, and this one over here. So there's so many different ways that I think investors can kind of set it up where it works best for them, where they're outsourcing things that are kind of a hassle that maybe don't really yield a lot of money or savings, versus where it's like the construction, or if you were, had an HVAC company that you had a really good relationship with and they gave you a great discount, utilizing these vendors you had on that property, having the property manager call them is another way of really saving money. So I think it's like for smaller investors, they don't have to make the switch right away. It's really just kind of parse out stuff as they start growing. But what do you think about that? Is it worth bringing, like when do you think it is for a small landlord to start bringing on and start kind of bringing some of those tasks in house and maybe away from some of those other vendors?
Yeah, I think with the management, it's a little bit, it's valuable for like new investors. Maybe it's their first couple investment properties to manage them themselves, just so they can learn, because it's a tough business. And so I think you learn real quickly whether or not you want to do it or not. I think for any investors, especially smaller investors, if their goal is not to go like full-time real estate investor or build a full-time real estate investment company, it does not make sense for them to try to build out and self-manage over like just a unit or two. I think if you got somebody that's like a successful business owner in a different type of business or a high W-2 income earner, like they're far better served really focusing on what they do best and making money and continuing to find deals and invest than trying to deal with the day-to-day like tenants and toilets and stuff, because it can be very frustrating. I think if you decide to go full bore with it and you start to get some volume, once you get past that, like, 20 or so units, you got to really start looking at bringing on some help to help you manage it. And so I think that's the biggest thing for me, is whether or not this is something you want to do full time and build a full time business out of it, or whether you're trying to do something else full time and just invest for true like passive income. I think you're better off hiring a property management company. And then I would say the same with the construction company. Is like the problem with the construction company is it's a lot to learn. We've had to learn. We spent a lot of money on education by learning stuff the hard way and messing stuff up. And so it's just like, just trying to jump in and learn like ground up new construction or heavy rehab. That can be an expensive, learning process. So it's the same thing. If you can find a reputable, builder who's reasonably priced and like really like transparent with their costs and what they're truly charging you, that's hard cost versus overhead versus profit. Like, I think that's usually a better bet for most people, unless they're already in the construction industry and just trying to make that trade and kind of go into new construction versus the rehab stuff.
Yeah, for sure. No, that's a lot of great points there. I think when I was speaking to smaller investors, maybe that they're doing it all themselves and they're 10, 20 units plus 30 units. I think the goal is really, when I've spoken to them, it's like, hey, get as big as where you can hire a full-time or part-time handyman. And that like really alleviates a lot of hassle. You know what I mean? Because now you have someone that's like almost dedicated to your properties. Even if you have a property manager that's calling them, this takes care of a lot of the cost and a lot of the headache if you have one person that's like on call for your properties. You know what I mean? And now you're not calling plumbers, trying to do this, do that. You have one person that's like going out and taking care of a lot of these small issues that can be rectified. The majority of them can be rectified with someone that's knowledgeable to a certain degree. So, but very interesting how all that works. One thing with you're growing all these different businesses, becoming vertically integrated, obviously systems is something that comes into place, becomes very important. Can you let us know some of the systems that you have put in place over the years that kind of allows you as an entrepreneur to kind of step back from your business, not have to work 24/7 with it without everything really falling apart?
Yeah, absolutely. So I would say, especially the last, maybe 2 years, as we've gotten larger systems, and kind of organizations become something that's been very important to us and very, very top of mind. Like, that's something we're spending a ton of time on continuously. One thing that we started at the beginning of 2025 is operating on EOS. And so that's something that's been very valuable for us, especially as a multi-entity business. So it allows us to be a little bit more organized in the way that we're operating and just giving clear, company or department-wide meeting tempo, plus just all across the board meeting tempo for our leadership team. And then technology, I think technology is advancing at kind of a ridiculous rate, but some of the stuff that we switched over to, that's a little bit painful sometimes to switch over, but just more robust property management software. So we implemented AppFolio last year. And even though there was a little bit of a headache to switch over to them, once we get it in place, it's like a force multiplier. We can take on more having something like that in place. And same thing on the construction management side. I mean, several years ago, it was just like the schedules and scope of work and order of operations all just up in my head. And then it's trying to systematize that and bring in software that makes that easier. So we went to Asana, which was just kind of a general project management software that we tailored to construction projects, and are in the process now of switching over to Builder Trend, which would be a much more robust construction project management software that allows us to really track everything from order of construction operations to timelines to accounting, et cetera. And so that's been a lot of it. And then documenting, especially these last 6 months, has been a lot of documenting SOPs. It's something that always sounded boring to me. But as we scale and we bring on more people and we've got to train, it's documenting the way that we do things well. That way, when we bring on people, I'll give you an example. We just brought on a virtual employee that lives in South America. She's awesome. She's a rock star, and she does really well when we can just say, hey, here's the SOP on how we do this. Let us know if you have any questions. And it's amazing how well she's able to pick it up just based off that SOP. And it just helps us kind of train and move faster.
Nice.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carrillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
Yeah, that's the important thing. I have a reminder in my just kind of daily notes is to do screen shares and screen videos of stuff they're doing. And you always forget about it. And then you're halfway through and like, I got to remember this for next time. You know what I mean? And it's one extra step. But now, I mean, we have Zoom, and it's like they have a thing called like Zoom clips, and you can now, it's easy, just like click it. It's like just recording your screen, and you can just go through it and you can talk as you're doing it. And it's much easier. Obviously, someone could put these into like checklists down the road, but it's much easier once that happens. You can just say, hey, go into this folder in the drive, and you can see this video for doing it. And it makes it a lot easier, a lot less questions when you do it that way, because if you were writing it out and you hadn't really documented by video, there's going to be things you're going to miss. And there's going to be things that you were doing that weren't done before, you know what I mean? Or that need to be done before going to the next step. So I always find like documenting through screen videos, stuff like that was something that we've utilized. And especially with virtual employees, it's fantastic. So
yeah, it's very valuable. It's something we're constantly, I guess, touching base on the thing. So for my employees that work for me, the way I always explain it is if you get sick next week and this thing that you do that's super important to the business needs to get done, and I have to do it, and I haven't done it in 2 years, like I need to go in there and read and watch a video on how you're doing it so that I can step in and handle it for you. Now, I hope that I never have to step in. The goal is to build the business so that it can operate without me. But if I had to, it needs to be like, understandable enough that I could jump in there and do whatever it is. So,
yeah. That makes perfect sense. So kind of going back to when you guys were getting started and you're starting to scale, because there's investors or there's entrepreneurs that are listening that, they don't know what would be their first step into taking some things off their plate as they're growing. They have something else going on. They have a full-time job or another business. What would you say were some of the first key hires that gave you the most freedom in the beginning of, and this could be for starting a business or just if you're a starting real estate investor?
Yeah, absolutely. It's tough when you're starting out because I see a lot of new investors struggle with this because they want to do as much themselves as possible so that they can either make more money or have like more left in the deal or more to reinvest, which I get. Like that's how it was when I started. I was literally doing everything. And so one of the first kind of key hires that I made, because we were doing a lot of heavy construction projects, so think flip style renovations, like big full renovations, was a like kind of field construction person that knew how to do a little bit of everything. But most importantly, I could start, because I was still working at the time, I could start delegating just simple tasks. And it's tough at first, and it can be frustrating because it's like, I could go to Home Depot and pick up some materials myself and it would cost me nothing. And if I send him, he's going to waste an hour or two going to Home Depot because he's going to lollygag and talk to everybody at Home Depot and stuff like that. But if I could pay him 2 hours worth of his time to do it, and me not have to do that, that frees up my time to go focus on learning that next step. And so that field person was like that. I would say that was the first key hire for me going down that path. And then really like the hard part was forcing myself to allow him to, one, help with some of the construction stuff, but two, some of those more just gopher running around type tasks, even though I knew it was like I was spending money to have him kind of, go to Home Depot and buy a soda and hang out for a little bit. It was worth it. And then for me, it was really once I hit a certain number of units, and because we had these big construction projects going on, plus we were managing, I would say 20 plus units, is making that leap even before it probably made sense financially to hire somebody in-house to help with the property management. Because again, for that to be done well, it takes a lot of time, and really bringing somebody in-house to start managing that. And then again, as we grew and started to take on more and more, it's just bringing in like construction project management, help and more help on the leasing side. And then more recently, it's been like growing a leadership team and offloading bookkeeping and accounting. And I continue to see like almost everybody that we hire can do whatever it is their job is better than me. But I think entrepreneurs' first instinct is that they are going to be able to do it better than anybody else. And what I found is usually the opposite. It's just finding the right person to take over in those roles. And when, I think the sequencing is usually what people struggle with.
Yeah. I think I had a mentor years back and they were telling me, about those first few hires, and they're like, you just have to be comfortable with them doing it at like 75% or 85% efficiency. I don't know. I think what the number exactly was, but the whole thing is that they're not going to be as efficient as you. And knowing that, if you're paying them $20 an hour or $25 an hour and, and they're going out there and part of that is wasted, whatever it is, then you're like, well, is it still worth this $50 you paid for them to do this versus you spending this, hour to do it, hour and a half? And that's kind of like the realization we have. But yes, with stuff coming down to like bookkeeping and these things that I find just to tear the worst things ever to do. It's just like, get this out of me, away from me as fast as possible. And those were like the main hires I had done initially when growing businesses was just like bookkeeping, obviously accounting. It's all like, I don't want any part of any of this. I'll review some stuff. I'll hit the buttons to send the pay bills, but it's something it's like, I don't want to deal with anything reviewing any of these bank statements and putting stuff into QuickBooks. So.
Yeah, it's tough. And especially as we scale, it gets hard. Like I can honestly say, like when earlier on or a couple of years ago, when I was just hustling, doing everything myself, it was easier in a way. And like I may have made a little bit more like kind of vertical or earned income because I was handling everything myself and didn't have any overhead. But there's really, for us to continue to grow at the pace we want to grow, there's no way to do that yourself. Like you have to build out the teams and the systems to be able to take you to that next level. Where we're at today, it's just a non-optional thing.
Yeah. So one thing, Chase, I years back, a friend of mine gave me this book and it was called 10X is Easier than 2X. And I don't know if you've ever read it, but in that, it's kind of like why I brought it up and something I didn't talk to you about before that we'd speak about, but it was something that it sounds exactly like that, where it's just, if you want to step back from the business, I found, and have a little bit more freedom, you can't do it like 2X. You know what I mean? You really have to build out a true business. And these are the things that you have to do. You have to delegate. You have to get people taking care of roles, especially the easiest ones are the ones you don't want to do, like bookkeeping for me. But the thing though is that it's one of these things where what is your thought on that and how it comes full circle for what you guys are doing?
Yeah, I think it's amazing. I think it's Ben Hardy, right, is the author of that 10X is Easier than 2X. So he just wrote a new book called Science of Scaling, I believe. It's great. It's very similar, but it's one that he recently published. I got the opportunity to listen and talk about it in person at a very small event and then read that book recently. And I totally agree. It gets a little bit scary because he's like, hey, just go take your 10-year goal and bring it into 2 years. And if you shoot for that, like it makes that stuff easier. But it really is true, I think, as we continue to scale. It's scary because you have bigger swings in cash flow and stuff like that. But it's the bigger we can grow, I think the easier that gets. One thing that we haven't talked about yet, one thing that we haven't done yet is raise capital. So everything we've done has just been kind of internal, and that's definitely can be a limiter for us because of capital. And so the next the step that would make the most sense for us next is to go out and raise capital for some of these larger projects. And it really does, when I look at it through that lens, like that's still, that's something we'll probably be working on this year. And kind of like what you're talking about, if we can go from, instead of doing 2 or 3 infill lots, we go do an entire subdivision, and that would require us bringing in capital partners so that, it'd be a win for them and a win for us, but that would allow us to scale much more rapidly, than trying to do it at a smaller scale. So I do think there's something there with the kind of the harder and the quicker you can scale, the better off you are. But what he talks about in that new book is you got to figure out what's limiting you from scaling at that speed. And then that's what you got to work on breaking through.
I remembered it just when you were talking about the new software that you're bringing in that was more robust. And that was something where, you don't want to do that because no one wants change or likes change, but it's kind of like what has to happen. You know what I mean? You kind of look at it and you're like, I don't really want to do this hire or do this, but it's kind of like, these are the key people that you need to bring in to make it work. And that's going to disrupt a little bit about your time. It's going to make you work more and make less initially, but you have to look for that if you're going to do the 10X thing. So it's, that's kind of what I found out over the years, but so many years that you've been, using your own capital, building properties, renovating properties, what are some common mistakes you see real estate investors make? And it could be multifamily investors, it could be any part of the real estate investing spectrum.
Yeah, I think especially for newer, I'd say newer, and even investors that have been doing it for a little while, one of the biggest mistakes I see, and this is something that I had continued to make for a really long time, is underestimating the scope and the cost of renovation work. And I think that's very applicable to both multifamily, large multifamily, small multifamily, flips, single family buy and hold investing, kind of whatever you're doing. But if you're buying something where you're trying to add value through some type of improvements or construction work, I think that investors really need to be realistic with themselves on what it's going to cost and get a true picture on that before they go into the deal. And so I think a lot of investors will look at a deal, they'll get excited and they'll say, well, I want to do this, this, and this that'll help me, increase the rents by this much. And then the deal works, but they don't spend enough time figuring out what it's going to actually cost. And I think because of they in a way kind of lie to themselves and almost don't keep track of it close enough to know where they're really at on it. I think because we've hammered so hard on the construction side, we've gotten really dialed in on our costs. Like we don't want to be surprised by additional construction costs. But early on, that was like a mistake that I made over and over again. It's like, we're going to buy this. Our renovation budget's $80,000. It's going to be worth this much when it's done. It's going to cash flow. It'll be great. And then we get in there and it's not $80,000. It's $110,000. Now we're scrambling, trying to find the extra cash to finish the project or going back to the bank. And so I think it's just better to be really tight on your numbers on the front end, and trying to avoid those those panic overages if at all possible.
Yeah. I had a mentor of mine tell me, just do really fat deals. And it was like, if you start and you can catch yourself doing it as a real estate investor, I found, where you're like, oh, I can do this. I can, sharpen the pencil here, do it there. And you're like, hold on. Wow. It's like, now we're getting into, because this is where reserves, because if you're going over on budget, pretty much it happens in, I would say, the majority of real estate investing, no matter how experienced someone is. It's just how it works. You don't know what's behind the walls, but that's why we have reserve funds, And when you start moving numbers around and trying to save money here and do stuff before you've even really bought the property, reviewed what's going on and know 100%, I think it's one thing that you're just hold up, we have to really go in with a lower number to take out any of these variables that we might not know about.
I always say it costs what it costs. And so just make sure you know what it's going to cost, because you're not going to be able to get it for cheaper. Usually once you're into it, if anything, it's going to be more expensive.
Definitely. So Chase, as we're wrapping up here, what would you say over your years as an employee, as an entrepreneur, as a real estate investor with several different businesses, what are the main factors contributing to your success?
Yeah, I think a couple things. I think deciding where you want to go. So maybe setting some goals around what you're trying to achieve. That's probably going to change over time, and that's fine, but at least have somewhere where you're heading. Probably the biggest one for real estate investing, I think, is you just got to start. It's probably going to be the wrong way. It may not be the best deal. It's probably going to change a bunch of times if you continue doing this, but you just got to go. You got to get the first deal done. That's a super important one. And then if you're going to maintain in this career and down this path, there's going to be times where it's hard and stressful. And so you just can't quit. You got to have the grit to continue going and not quit and figure it out. You're going to learn a bunch through those times. And then that'll kind of bring you to that next point. And then just when you think you got it all figured out, something else hard is going to happen. And you're going to have to figure that out and not quit and get through that. But I see a lot of the really successful investors that I look up to, it's just they've been in the game for a really long time and they never quit. And there was a lot of guys who probably could have been more successful than them, but they gave up after a couple of years because it got hard. So I think those are kind of the key things for me.
I think the other thing too is, like you were saying, you might not do it the right way when you start. And if you listen to any kind of seasoned real estate investor that's been there for 2 decades plus, you will hear how their investing strategy and criteria have changed, how they've been most successful, and kind of what fits in their buy box the most and what they do. And it's definitely different usually than what they started out with, different classes, different size properties, whatever it is. And they realize where they made money, where was less hassle, and kind of where they're focusing.
Yeah, absolutely.
So Chase, how can our listeners learn more about you and your businesses?
Yeah, absolutely. I hate to say it like this, but social media seems to be the common theme nowadays. And so probably Instagram on social media would be the easiest one. It's ChaseCalhoun.realestate, I think is the Instagram handle. We're also on YouTube with the same handle. We're trying to put out as much content as we can. That's just stuff we've learned and what we have going on, that type of thing. And then we do have a website. So it's chasecalhoun.com or apexprofessionalconstruction.com for the construction company.
Okay. Well, thank you so much for coming on today. We really appreciate it. And looking forward to connecting with you here in the near future.
Absolutely. Thanks for having me.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.